Hi, today we will talk about gold futures again, but this time we're talking about the put option that gets assigned. Don't panic when your gold futures naked put option get assigned. You might not know this option trick on gold futures. Technically, you can't lose money from any assignment if your strike is far out of the money. In fact, it might be very profitable if if your strike is far out of the money put. When you get assigned, you won't lose anything at all. And subscribe the channel. Thank you. If you are new to this gold futures trading, I will explain to you one step at a time. There are two layers of the gold futures option trades. Number one, gold futures itself. Number two, options based on gold futures. Number one, what is gold futures? Gold futures are contracts that enable traders to buy or sell a certain amount of gold at a predetermined price and date in the future. These contracts are traded on various exchanges around the world, and they allow investors to speculate on the future price of gold without actually having to buy or store the physical commodity. How are the values of a gold futures contract determined? The value of a gold futures contract is based on the current market price of gold, as well as various factors that may influence the future price of the precious metal, such as geopolitical events, economic data releases, and the changes in supply and demand. Why gold futures are popular among professional investors. Gold futures are popular among investors who are looking to hedge against inflation or currency fluctuations, or who are seeking to diversify their investment portfolios. They can also be used by gold producers and other industry participants to lock in future prices for their gold production. Number two, what are the options on gold futures? Options on gold futures are contracts that give traders the right but not the obligation to buy or sell a certain amount of gold futures at a specific price and a date in the future. There are two types of options: call options and put options. What are the call options on gold futures? A call option on gold futures gives the holder the right to buy a certain amount of gold futures at a predetermined price, the strike price, on or before a specified date. If the price of gold futures rises above the strike price, the holder can exercise or assign the option and buy the gold futures at the lower strike price, and then sell them at the higher market price, profiting from the difference. What are the put options on gold futures? A put option on gold futures, on the other hand, gives the holder the right to sell a certain amount of gold futures at a predetermined price, the strike price, on or before the specified date. If the price of gold futures falls below the strike price, the holder can exercise the option and sell the gold futures at the higher strike price, and then buy them back at the lower market price, profiting from the difference. What is the goal of trading gold? What's the goal of trading gold futures options? Options on gold futures can be used by traders to speculate on the price movements of gold, or to hedge against adverse price movements. They can also be used by gold producers and other industry participants to manage their price risk. However, options trading can be complex and risky, and it is important to understand the risks involved before engaging in such trading activities. What is naked put option? An option contract that is naked or uncovered is one in which the option writer or seller does not possess the position in the underlying security necessary to cover the contract in the event of assignment. Also, the seller does not own any options of the same class on the identical underlying security that might serve as a hedge against prospective losses. You can't lose money from assignment if your strike is far out of the money. Technically speaking, when your naked put option gets assigned, you won't lose any money. You will keep your premium, which you earned at the time you sold this strike to the buyer. In fact, it might be very profitable if your strike is far out of the money put. When you get assigned, you won't lose anything at all. How does the far out of the money short put work? If you can hold the gold future for a while, and when it rebounds back to a higher price, you are winning on both up and down directions. Remember, you already sold the option for a premium. That premium is your profit when gold futures went down. You'd like to take a calculated risk to earn some income that you wouldn't be able to earn elsewhere.
Risk. Real.
If you'd like to try this technique, please do not use all your available capital to trade on this, because the risk involved is something you must deal with. This is not for everyone who has little or no experience in the market.